Hello, everybody, and welcome to VRIC Media, the most trusted voice in junior mining. My name is Jesse Day. We are bringing the VRIC to you each and every week with our series of expert online panels. I'm very excited for the one we have lined up for you today. We have Taylor Kenney, economic journalist at ITM Trading, and Mario Innecco, host of the Innecco 64 YouTube channel. It's great to have you both on the show. We're going to discuss the gold market, specifically gold revaluation, and a whole lot more. So I'm very much looking forward to it.
Thank you so much. I'm very excited to be here as well. Can't wait to get into it.
Yeah, thank you, Jesse. Yeah, I'm looking forward to our discussion.
Great. Well, let's start with the possibility of gold revaluation because at the moment, the US gold reserves are only valued at $42.22 per ounce on the Fed's balance sheet. Firstly, why hasn't this price been raised to reflect the current value of gold? And what would the implications be, good and or bad, if gold were revalued at its current trading price? Taylor, I'll start with you.
Awesome. Yeah, I mean, it's a great question. I think everyone's so focused right now on the positives around a gold revaluation. Oh, it will help balance the budget. Oh, it will reduce liabilities, which is true. But if it was all sunshine and roses, we would have done it a long time ago, right? I think the reality is that a stronger gold means a weaker dollar, right? And when we look at what's going on with dollar collapse, I talk about this a lot. It's a process, not an event. I'm not saying the dollar is going to be kaput today or tomorrow, but as the dollar continues to be chipped away at on a global scale, and we're looking at this new monetary system that inevitably is being ushered in, gold revaluation really does signal to the rest of the world a weaker dollar. And it would mean that the fiat currency relative to the dollar would likely decline. And of course, that's something that I don't think that the United States has been interested in doing previously, in my opinion. But it's an interesting thing that it's being floated now and going mainstream too, right? This isn't something that's just being talked about in our circles. This is being talked about on a larger scale. And it kind of signals to me that maybe the United States is finally taking their head out of the sand a little bit, maybe preparing to get in front of it. I don't know, but it's an interesting time for sure. As far as what would happen, implications good or bad, I think the long and short of it is that anytime there's been a reset, gold's been at the center, and this would be no different. Those who hold gold win. Those who hold dollar denominated assets lose. And that goes for both central banks and individuals.
Very interesting thoughts. Mario, what is your opinion on the possibility of gold being revalued? Why hasn't it been done so far? What are the positives? What are the negatives?
Well, I like to go back in history a lot of times, as you probably know. And prior to 1973, there were a couple revaluations in the modern era. And by modern era, I mean the last 120 years. One was in 1934, January 30th. Roosevelt revalued gold from $20.67 to 35. And that was at the height of the Great Depression. The country was in crisis. And then if you skip forward to 1972, it was the same thing. The country was in trouble. Nixon had closed the gold window the previous year. The monetary system of the world was in chaos, and they raised the statutory price by about 10% to 38. And it didn't work. What it did, it created a floor under the gold international gold price, and gold just shot up, and they had to revalue it again in 1973. I think it was February to 42.22. And again, that put like a floor on the gold price. It's almost like the Treasury wrote a put to the market. And of course, gold went to almost $900 in 1980. And why haven't they done it since then? Well, because it's an admission of failure of the dollar system. And I think the current administration, though, seeing who's in charge of the Treasury, they're a bit more, they're admitting that things are not great, and they see the BRICS going towards gold. And yeah, it will be an admission, like Taylor said, of a weaker dollar. And I think it will put a massive floor on the gold price, and we could see gold take off if they revalue it again. And yeah, that's how I see it.
Well, we've seen Trump, if nothing else, be a maverick in terms of taking unconventional approaches, at least compared to past the previous administration. Do you think that the Trump administration could put gold revaluation on the table at this point? What would be the obstacles potentially standing in their way of such a move? Would there be opponents to revaluing the US's gold reserves? And how do you think other nations might react to such a move? Taylor, what are your thoughts?
Yeah, I think that President Trump is interesting, right? Always keep him guessing. He likes to throw things out, poke the bear, see how people respond. Do I think it's a possibility? Absolutely. Do I think it's a probability tomorrow? Maybe not immediately. I think, again, we're kind of in this like poking situation right now, but absolutely it could happen. I think that he's not putting anything off the table. As far as opponents go, I would see Wall Street, I would see big banks, which tells you something right there. I think also maybe a lot of America's allies, to be honest. Mario just mentioned BRICS, right? We see China being a record buyer of gold among other nations that might not be the United States' best friends as far as these central banks who are buying up record amounts of gold. And there's a reason for that. Again, right? You look at the underlying reason as the dollar continues to fail. And I mean, I sound like a broken record, but ultimately anyone who's holding USD reserves, they could be the ones with the short end of the stick should this happen.
And Mario, your thoughts on potential opponents to a gold revaluation. Do you think it's a move that Trump might at least consider at this point?
Definitely. And despite the fact that Scott Bessent mentioned the other day that he's not thinking of revaluation, you would say that if you were thinking of it. You're not going to tell the market, yeah, we're going to revalue. As far as whether it can be done, I think legally in the United States, you need a vote from Congress to change the statutory price. I don't think that would be difficult to get through because I think it would improve conditions for politicians. It would make the dollar weaker. They could keep spending. So I don't see that as a problem domestically. I guess, like Taylor said, if you're holding loads of paper promises or treasuries, if the US were to revalue it to a really high level, it would annoy a lot of people because you'd be left holding the bag. And that's why I tell people they need to have physical gold because paper promises won't do.
Yeah, absolutely agree with you there. And Taylor, you released a really interesting video on the ITM trading channel about what would happen to silver in the case of a gold revaluation. So break down that thesis for us, how silver would react in that situation. And then Mario, I'd like to get your thoughts as well.
Yeah, I think it's a great question people are asking because everyone's so focused on gold, which makes sense. We're talking about gold revaluation, but then people are asking, okay, well, if gold is revalued to something significantly higher, what does that mean for silver? And I want to preface this by saying I personally own both gold and silver. I believe everyone should own both gold and silver, and I believe silver will go up in a gold revaluation. That being said, I see a lot of comments and people online saying, hey, it could go 1-to-1, right? We could see silver shoot all the way up. I personally don't think that's going to happen. I think that, again, I go back to the underlying root cause here. If we're revaluing gold, gold is going to go up significantly. Do I think silver will go up as well? Yes. Against what, though? The failing fiat currency. And what I do is I look at history, and I've looked at other currency collapses, and whether we look at Venezuela, Argentina, Lebanon, any time that we've had Weimar, anytime we've had these kind of fiat currency collapses, what has happened to gold and silver? Gold has always been worth more. Do I think that the gap is going to close, right? Yes, I do. But do I think that silver is going to go astronomical and meet it up at the top? No, I don't think so. I think relative to the failing fiat currency, it's going to go up, but not as much as gold, period. That's my thesis, I guess. So do I think you should own both? Yes, but for different reasons. I don't view them as an investment, though. I know they are an investment, but I don't personally own gold and silver to buy them today to turn around and sell them tomorrow. right? So it kind of depends again on what you're preparing for.
Absolutely. And Mario, what are your thoughts on how silver might react if gold were revalued?
Yeah, I mean, silver's been frustrating, but like Taylor, I love silver as well, and I have silver. I actually think having silver coins from all over the planet, like old coins, is really great because you can learn about history. I also have bullion silver, but I agree with Taylor as well that some people see 1 to 1. I'm not too sure about that. I would be happy with 30 to 1, which was where we got to in 2011. But I actually can see it going to 15 to 1. I'm looking at something here that some Make Gold Again posted. He's got a clown face at 91 to 1, which is where we're now roughly. And you look back in history until the Egyptians, it was never higher than 15 to 1. So yeah, I think 15 to 1 would be an interesting level. And yeah, from here, silver will outperform gold. But I also, like Taylor, like having both. And the reason gold and silver are acting as investments right now, even though they're money, is that our currency system is so out of whack that it acts as an investment. In an ideal, honest world, gold and silver would not be, yeah, they would be just money. So, yeah.
Yeah, interesting thoughts from both of you. Mario, I want to highlight a video you recently released on your channel called Gold Leading the Way, Second Leg of Commodity Bull Market on the Cusp of Breaking Out. You stated in that video that we are in the age of hard assets and tangible goods. This is a theme that's come up quite a bit on this show. The fact that we may be seeing a rotation at some point out of overvalued tech, the Magnificent Seven. The broad indices have just continued climbing higher over many years, and a lot of what's driving that is passive inflows from a lot of these passive ETFs. Do you see a reversal happening? Break down what you're seeing when you say we're in an age of hard assets.
Well, I'll have to take you into the bond market, which is a market I worked in for 25 years. And the bond market was in the bull market from 1981 till 2020, about 40 years. And prior to that, from 1981 to 1941, bonds were in a bear market. So there seems to be a 40-year cycle. And when bonds go down, that means the cost of credit goes up and financial assets become harder and harder to carry because you can't roll over and for cheaper, uh, like uh, like we've seen the everything bubble. So I've been warning about this. Maybe I was a little early, 2019, but I saw that in 2020 there was a crash of all assets. Even treasuries were really uh, very volatile in March of 2020. And the CRB index, the Commodities Research Bureau index, crashed. Gold dipped really quickly from 1750 to 1450. I think silver went down to $12, but they rebounded really quickly. And silver went to $30 still in 2020, and gold went almost, I think, went to close to 2000 by the summer of 2020. And commodities, the general commodities, only started making a move a little later. Um, yeah, they topped in 2022. So now, looking at the technical picture, it looks like gold is leading the way, and commodities could, I think they're just catching up. And that's why, as well, I think we are in an age of hard assets. The fact that Trump is also bringing out this policy of tariffs is very significant because he wants to take America back to a time when they used to make things and export things and have an industry. The bull market in bonds has been abused in that it financialized the whole U.S. economy. The only sectors that have done well uh, are on Wall Street: private equity, fund managers, hedge funds, and politicians. So I think the balance is gonna, yeah, it's gonna shift. Things like that don't last forever. I believe in cycles.
Absolutely. I do as well. In fact, I'm reading Mastering the Market Cycles by Howard Marks right now. Really fascinating thoughts that echo a lot of what you're saying as well. Taylor, do you think we're entering perhaps a commodities super cycle? This is a word that's come up a lot on this show. Some people say it's a bit hyperbolic. But could we be seeing this rotation and hard assets, perhaps led by gold, becoming the new norm when it comes to high-priced assets in the market, as opposed to your Nvidias, your Teslas, et cetera?
Yeah, absolutely. I 100% agree with what Mario is saying there. And I think that commodity supercycle is the right term because a lot of people have this tendency to look at the now or this year or next year, right? We're talking decades potentially, right? I mean, I need to do more research into the 40 years, but if you look at commodities compared to equities, right? Like at the ratio between the two, obviously the stock market's incredibly overvalued, and I believe commodities are extremely undervalued. And in fact, they're so undervalued, this ratio is lower than it was during the dot-com bubble. And I think, again, it's obvious that we've had low interest rates and cheap credit, right? Like Mario just said, and all these things leading to this inflation and overvaluation of equities that's not built on real tangible growth. I also believe that as we continue to see this loss of confidence and faith in fiat currency and paper money and things that aren't real, we're going to have trust and faith again in something. And it's not restoring that in paper currency, right? We are going to be shifting into something real and tangible. And that's why I believe that absolutely commodities will be at the center of it. And I think really we're just kind of at the beginning of that. I think we have a long way to go. Not to say that things couldn't happen quickly because we can all feel that they're accelerating. But I think that commodities on the up and equities on the down, I mean, I don't even know where it's going to go, but I think, again, it could be a long time.
I want to discuss asset allocation for a moment because for most people who are advocates of sound money, gold and silver, they tend to focus in on physical gold and silver as the highest allocation in their holdings. I have other people who are maybe not so enthusiastic on the sound money front who look at gold and silver maybe as protecting purchasing power, but also as a way to invest through, for example, mining stocks. I wonder for both of you personally, how do you allocate your capital? Are you a believer, like Alistair McLeod says, that gold and silver are money, everything else is credit, and he sees a potential credit collapse on the horizon? Therefore, in his mind, you basically want physical gold and silver. He said maybe speculate in the miners, but outside of that, I wouldn't touch the stock market. I wouldn't touch fixed income. Do you have similar thoughts to that? Somewhere in between? Taylor, I'll start with you.
Yeah, I think that there's somewhere in between for me. I take a very pragmatic approach. I think that absolutely gold and silver is true money. Everything else is credit, yes. But that being said, I'm not opposed to people making profit with what they feel comfortable with, right? Just like if I go to the casino and I take out a certain amount, I'm not convinced that I'm going to win. I mean, I could think I'm great at craps, but ultimately I have to feel comfortable with losing that. That's how I view it personally. So I think, again, I think that there's somewhere in between, but it depends on the person. It depends on what you're comfortable with. I think there is opportunity out there, but it all comes down to what you're comfortable with. And I think first and foremost, make sure that you can sleep sound at night knowing that what you have is protected.
Absolutely. And just a follow-up question with you before I move on to Mario.
Yeah.
Are you looking at gold and silver equities at all right now? There's been a lot of talk on this channel. It was a big theme at the Vancouver Resource Investment Conference this year was the valuation gap between gold itself and the gold mining space. We can even look at the majors like VRIC and Newmont, nowhere near their all-time highs. Meanwhile, gold continues to make all-time highs. A lot of people asking what gives there. Are you watching that space? And if so, what are your thoughts?
Personally, I'm actually not. I'm not afraid to admit that I don't invest in things that I don't know fully. And that goes for everything. So for me, physical gold and silver, it makes sense. I understand it. I know exactly what I'm doing with it. I will be very transparent in saying that I don't understand that completely. So for me, it's not something that I want to invest in. But that's just me, again.
Yeah, no, I love that. Instead of making up an answer, be truthful about it. And in many areas of the market, I don't understand as well. Mario, are you watching the gold and silver mining space? Do you speculate in that area? And what are your thoughts particularly when it comes to gold equities on the valuation gap between the metal and the miners.
Yeah, I do follow the space, and I started buying physical gold and silver in '02, and after a few years, I started looking into the miners, and I was doing quite well in '08 and 2011, and then I held it for too long, and I learned my lesson that it's a really cyclical, risky market. You can make money, but yeah, you have to be nimble, and I do follow. The mining equities. I do have a stake in there, but it's not big enough percentage-wise of what I own to make me not sleep well at night. But at the same time, uh, from the discrepancy of value between bullion and the mining stocks, it could be a big enough position to make a difference for me. And as far as Alistair McLeod, I'm actually 100% in agreement with him about the credit situation. And yeah, I don't hold any other equities except for miners, and the rest is physical gold and silver. It doesn't mean to say I'm going to hold that forever, or even now. If I see an asset that I like, something that I need, and it's heavily undervalued, I might think of swapping into fiat. You have to swap into fiat, unfortunately, or maybe not. Sometimes people will take the gold and silver, swap into that, and then get that asset. But like Taylor said, you need to know, understand what you're investing in, and do your homework. And the other thing that I think is investing is not just investing in companies, it's also investing in yourself and your family. So that's another way I look at investing.
Absolutely. I want to talk about Fort Knox. There's been a lot of speculation, a lot of controversy around auditing Fort Knox to see if the stated gold reserves are actually there. Strangely, Trump recently commented during a press conference in the Oval Office when he was with Macron that maybe the gold's stolen. He threw out some comment like that. I don't know why. I mean, firstly, do you think we will ever see an honest audit of Fort Knox? And what could the impact be on the gold price if it was found that there's significantly less gold than stated reserves? Taylor, what do you think?
Um, yeah, I don't know if a thief came in the middle of the night and stole it. I think that we'd probably be looking closer to home to our government if we're looking for a thief there. I don't know. But as far as an honest audit, will we actually see one? Unless I'm physically there with an expert and we're going through bar by bar and looking at it with my own eyes and I'm there, I don't know if I'll really probably ever believe anything that comes out 100%. I think anyone who takes things at face value in today's day and age, you're not paying close enough attention, right? There's too much going on. That's how I feel. So maybe it will be an honest audit. Maybe we'll get one. That would be incredible. I will always, though, have a little question mark personally. So my answer is no. As far as what would happen if it turns out that we're coming up short, obviously what we could expect to see happen is gold prices go through the roof, right? Demand continue to go up. It's kind of like when we look at everything that's going on with the paper gold market, right? What we're seeing, it's like if the gold's not there, people are going to realize, oh, there's not as much as we thought there was, or we don't know where it is. We need to make sure we get our hands on it. So I think that what we could expect to see happen if it comes back short is, of course, gold prices rise significantly.
And Mario, your thoughts on Fort Knox?
Yeah, I mean, if you look at it in terms of a spectrum, let's say if there's only 90% of the gold that was supposed to be there, yes, it's going to hurt the dollar a bit and help the gold price. But there's the other end of the spectrum. If it's below 50%, I think it could not just hurt the dollar and help the gold price, but annihilate completely the financial system because the fiat currency system is based on faith and credit. And I think in the back of people's mind, they always know that the US has 8,133 tons. And if that's not there, it raises a lot of questions about the honesty of government as well. uh, yeah, who was guarding the guards in Fort Knox? Uh, and there's a lot of speculation that a lot of the gold was taken out of there in the 60s and 70s. I've heard stories about it in the 90s, the gold being taken out because that was the period when the U.S. started the strong dollar policy with Robert Rubin. And one way to keep the dollar strong is to keep gold pegged down. And if you remember in the 90s, gold went nowhere. And Robert Rubin started out at Goldman Sachs at a department called J. Aaron, which was a bullion dealing department of Goldman Sachs. I'm not saying he stole the gold from Fort Knox. I'm just saying, it's suspicious. And like Taylor said, I don't think I'll ever believe 100% what government says unless you have an independent auditor that goes in there, independent of government, and says, yes, the gold is there, and they give us pictures and all the reports, and all the bars are really assayed and accounted for, because a lot of these audits, they take like 20% of the bars, and that's good enough. So yeah, that's how I see it.
And let's talk for a moment about retail participation in the physical gold and silver space. It's being muted in the West. I've spoken to a lot of people who say retail participation in the East much higher. Obviously, places like China, people don't really play the stock market. It's mostly real estate, how they invest. And then lately, the Chinese government has been encouraging citizens to buy more gold. Obviously, gold, a very cultural relic in India. A lot of people there have an affinity for gold. So there's much more retail buying in that space. What do you think the catalyst could be that would bring more gold buying to the West? And also silver is the other question, because as gold continues to rise over time, as I think we all believe it will we reach a point where people say, wow, look at what gold's doing. Okay, I can't afford to spend $3,000, $4,000 on gold, but okay, silver, maybe this is more affordable and a similar monetary asset. Do you think that higher gold prices could then lead to more retail buying in physical silver bullion? Taylor, your thoughts?
Yeah, I've talked about this before, but I think unfortunately America has short-term memory loss, like talking about American citizens. I think that it's sadly, I'm laughing because it's just kind of like how it is culturally here, but I think that we need something bad to happen in order for people to wake up. Like I wish that we're all sitting here obviously screaming from the rooftops, right? But I think until it happens to you, a lot of people here just don't realize and people get distracted, right? 2008 feels like a distant memory for a lot of people. And whatever the new shiny thing is, we all kind of as a society have this sense of FOMO. We want to be involved. We want to jump on the bandwagon. We think things that are going up are always going to go up. And I think that unfortunately, it's going to take a significant crash. It's going to take a reset really for people to wake up. And at that point, it's not that it will be too late. It's just that obviously they won't be able to protect themselves the way they could today. And I do think, yes, absolutely, that if people are waking up to gold, they're going to be waking up to silver as well. It's just that natural kind of snowball effect that we would see.
Yeah, absolutely. And I agree on the Western world, people not really having a grasp on the true value of taking wealth into your own possession outside of counterparty risk. It's funny, I have a friend back in Canada who shall remain unnamed. He started stacking silver in secret so his wife wouldn't find out about it because she would be outraged and demand that he sell it. What are you doing stacking these rocks in our basement? So that there needs to be a bit of a change in perception, I think, for your average person in the West. Mario, your thoughts on what could potentially drive more physical bullion buying for both gold and silver in the West?
Yeah, I mean, the public is still asleep to gold and silver. They're more awake about Bitcoin and cryptocurrencies. And if you look at I think the investable assets in the U.S., the total amount invested in gold and silver sector, that's bullion, miners, is just less than 1%. And I think back in 1980 or 1930s, it was more than 20%. So there's so much potential. But unfortunately, the general public always gets involved when late in the game. And I mean, I remember talking to friends 5, 6 years ago at the golf club. They said, "Oh, I've got this bond. It's maturing. What should I do?" I said, "Well, we should think about gold." And they said, "Oh, it's too risky. I'm not gonna do it." And at the time, gold was 1,000 pounds an ounce. Now it's 2,300. So yeah, when the public starts getting involved, you can bet that we'll be closer to a top. And do I think we're gonna see a crash from the top? Maybe a big correction, but it will still be a lot higher, in my opinion, than where it's now. But and then people years from then will say, "Oh, if you bought gold at 12,000, now is at 6 or 8, you've lost money." But there are people that were buying like us, probably, I don't know where you've been buying it from, but below 2,000, below 1,000, and that's what people forget. And that's why I think dollar cost averaging and buying gold and silver whenever you can, uh, no matter where the price is a good strategy.
Absolutely. I want to end on the potential collapse of the dollar. This is obviously a topic that gets very hyperbolic a lot of the time, where people seem to like to put a time frame on things like the US dollar's dying tomorrow and gold is going to become the new form of money. Obviously, I know both of you have a more nuanced view than that. Taylor, you gave a talk at the VRIC this year about this topic. Actually, I believe it's the most viewed video on this channel to date. I think it's getting close to 400,000 views, if it's not at more than that. And we have a lot of videos, so that's pretty amazing. Break down how you see things when it comes to the potential collapse of the US dollar. In such a scenario, would all fiat currency by proxy have to then collapse at least as much, if not worse? And would that sort of situation force a monetary reset? Walk us through how you see that playing out.
Yeah, I think that you framed it well. I guess to start, it's not an easy topic, obviously, to break down in a short, succinct way. But I do think people get hung up on this idea again that dollar collapse is this event, the singular event. And I always say it's a process that could be marked by events or leading to an event that we say, oh, that was the day. But really, it's more of a process, one that we're in right now, one that's accelerating. As far as what it looks like, what would happen, I think that, again, we know that it's happening right now. We know that the dollar is losing its status. We know that the dollar is going to continue to lose value. It's just going to be chipped away at, chipped away at, chipped away at until eventually this new monetary system is introduced. I think that it really will be the death of fiat currency. Not to say another one won't pop up in the future, but historically, I mean, this is a completely different scenario than what we've seen, right? This is the global reserve currency. I mean, this is going to be, and the world is so interconnected. I guess that's the other component now that's different too than the past when we've looked at fiat currency collapse. Everything is so intertwined. So what is going to be like the big event? What is going to be the timeline? I can't say. I don't have a crystal ball, but I think we know that as the world continues to move away from the dollar, from geopolitical risk, advancements in technology, as the United States continues to weaponize the dollar, we have kind of all of these tracks happening at once that are pushing forward this dollar collapse or accelerating it. And I do think, again, kind of tying back to the commodity super cycle conversation, that, like I said, we're going to have to put our trust in something. And I think that something is going to be physical, tangible assets with gold at the center, the way it always has been in historical currency resets.
And
Does that
Mario, your
answer it? I
thoughts?
know, again,
Yeah.
it's a lot to pack into a succinct answer there.
Yeah, no, absolutely. Those were some great thoughts. Mario, I wonder what you're thinking when it comes to where we are at in the life cycle of the US dollar and fiat currencies and where it's headed.
Well, I think we're pretty near a point where people might lose confidence in the dollar. If you look at like the dollar since 1953, for example, I've looked at a website called FX Top, and you can put the dollar in terms of grams of gold, and it's lost 99% of its value. But that last 1% is still quite, yeah, it's quite significant. And I think it could end up being like in third world countries where you have new currencies been issued and zeros taken off, and then backing that currency by the dollar. But in the case of the dollar, you can't, if the dollar, people don't have confidence in the dollar, you have to back it with something that people have confidence. And usually that's gold. The 50 plus years we've had of fiat currency being a reserve currency for the world is an aberration. And it doesn't mean to say gold is going to come back in coins and people are going to use gold as coins, but I think it will be, again, instead of treasuries and treasury bills, it will be the reserve asset that countries will hold mostly. And yeah, and that's why I think a lot of countries have been buying loads of gold since 2022. And maybe that's why a lot of physical gold is flowing back to the US because they know what's coming.
Yeah, great points. This has been a fantastic conversation. Taylor, tell us about your work at ITM Trading and where people can find that.
Yeah, absolutely. So they can find us at itmtrading.com or on YouTube, ITM Trading. We specialize in gold, silver, and lifelong wealth protection. What I love about ITM, though, why I'm here, what brought me here, is that we do focus on education. So if you can't tell, that's critical to my mission. It's critical to ITM's mission. We're big believers that you can't prepare if you don't know what you're preparing for. Looks different for everyone. So if you are interested, if you're concerned about what's going on and want to learn more about how you can protect yourself with physical gold and silver, ITM Trading is the place to do it.
Great. I'll put a link in the description below to the
Awesome.
website as well as the YouTube channel. Mario, tell us about the Innecco 64 YouTube channel.
Yes, I've been going for about almost 10 years, and the purpose of my channel is to try to inform the public about the fragility of our monetary and financial system and how gold and silver are really historically important. And just because it's historical doesn't mean to say it's not anymore. That's what I try to tell people. So yeah, I post a video every day at Monaco 64. I'm the home of alternative economics and contrarian views. Maybe with people waking up to gold, it won't be as contrarian. And on X, I'm at Monaco 64 as well.
Great. I'll put links to the YouTube channel and your X account in the description. Thank you once again to both of you for coming on. It's been a blast.
Thank you so much for having us. I've loved the conversation. So great getting to chat with you both.
Thank you, Jesse, and thank you, Taylor. It was great having a discussion with you.